Hello everyone. Welcome to Net Diligence Virtual Cyber Risk Summit. My name is Heather Osborne and I'm the Director of Global Events and Programming at Net Diligence, a cyber risk assessment and data breach services company. Net Diligence is pleased to bring our thought-leading content to the virtual space with this new webinar series. Visit our website at www.netdiligence.com to get more information about our upcoming webinars and in-person events. Before we begin, I'd like to extend our heartfelt gratitude to our virtual Cyber Risk Summit sponsors, particularly Aspen Insurance, our diamond sponsor. I'd also like to thank our 100+ speakers for bringing their thought leadership to our program. For today's webinar, we will be using the ON24 platform. Right now, you should be viewing the ON24 dashboard, which shows the live viewing screen. During the webcast, all participants will be in listen-only mode. Today's presentation is slated for approximately 45 minutes, with 15 minutes at the end for questions. Our panel of speakers will be taking questions throughout the session via the questions widget. Please type in questions during the presentation and click submit. If your question is of immediate import or concerns technical problems, you will receive an immediate answer by text. You can also find a widget entitled Resources, where you can download assets provided by the speakers and sponsors for each webinar. Just click the resource in the box and it will be automatically downloaded. If you are interested in receiving CLE or CE accreditation for this program, you must stay on for the full duration of the webinar and answer 3 polling questions that will appear during the course of the program. Additionally, please fill out the participant information questions. This will ensure that you are correctly matched to the state and professional organization. As a reminder, this webcast is being recorded. After the presentation, you will receive an archive link for further review or for sharing. The webinar will also be available for future viewing on our website. Again, thank you for joining the Net Diligence Virtual Cyber Risk Summit. We hope you enjoy the program.
Good day, everyone, and welcome to the SME panel, Moving to a Proactive World. This is Drew Walter from Ascot Group, and I am fortunate enough today to be joined by an esteemed panel consisting of Lauren Tennant Pollock from AXA XL, Sam Kassoumeh, a CEO and founder of SecurityScorecard, and Rob Rosenzweig with Risk Strategies. I'm going to go ahead and let everyone introduce themselves. So, Lauren, you want to go ahead?
Great, thanks, Drew. Hi, I'm Lauren Tennant Pollock, and I work for AXA XL. I'm currently leading our small business cyber product for the company, which is an end-to-end digitally offered product targeted for small businesses that are under $50 million in annual revenue.
Thanks, Lauren. Sam.
Hey, everyone. This is Sam Kassoumeh speaking. I'm a Chief Operating Officer and founder of SecurityScorecard. SecurityScorecard is a cybersecurity ratings program. We provide a score on an A through F scale, rating the cybersecurity health and performance of every single company in the world. We provide additional intelligence behind that rating. The platform is non-invasive and no permission is required.
Thank you, Sam. And Mr. Rob Rosenzweig.
Thanks, Drew. Rob Rosenzweig here with Risk Strategies. Risk Strategies is a leading specialty insurance brokerage. I run our cyber practice nationally, working with our clients across all market segments in advising them on their cyber risk posture and negotiating specialized insurance coverage to deal with those risks and exposures. We similarly also have a specialty focus in the small and middle market space with our Risk Strategies Cyber Resolute offering, specifically focused on that market segment to streamline the process and provide greater insight for our clients there. So glad to be with you all today and looking forward to our conversation.
Great. Likewise. Thank you all. So let's do a high-level intro to our topic today, SMEs, right, and cyber purchasing. So approximately less than 20% of SMEs purchase cyber insurance today. So relatively low penetration rate. we're in a new world today, right? Enhanced digital transactions, increasing connectivity, working remotely. It really continues to further accelerate the ever-evolving cyber threat and risk landscape, really driving these exposures, most notably ransomware. And really, how does the market effectively and efficiently place these cyber buyers, the SMEs, whether it's through educating the SMEs, the transaction itself, the product coverage is constantly expanding, pricing, how are the losses evolving, and how best to efficiently assess these risks at the end of the day, really enabling and leveraging technology. To that end, let's move on to our first poll question. The SME is defined by, we have number of employees, revenue, or geographic footprint. All right, great. Just following that question before we move along, let's talk a little bit about, collectively on this panel, let's really define what SME, how we define it, whether it's in each one of your organizations, how you look at it and approach the business, how it's defined. So, Lauren, you want to give us your thoughts there first?
Great, thanks. So we define SMEs by annual revenue size. So really looking at, for us, Ascot companies under 50 million annual revenue. Though it's a really interesting underwriting question, I would say, because from the cybersecurity side, we're seeing a lot more companies create definitions around number of seats or number of devices. And a lot of times this actually resonates more clearly from an underwriting perspective when looking at the exposure that a small business may have.
Great, thank you, Rob. What are your thoughts around the definition of SME?
Yeah, I mean, I'd agree with what Lauren said and your earlier comments. It's a bit of a moving target, and I think everybody defines it differently. Broadly speaking, we're generally thinking of SME as clients under 250 million in revenues for a number of reasons. Some of it is just experientially what we've seen in the way of maturity around cyber risk exposures, what we've seen around investment in cybersecurity in that segment of the market, and some of it's also dictated in terms of how the insurance marketplace has responded to that segment, which obviously we'll talk about in greater detail, but how the process for procurement, underwriting, and negotiation in that segment of the market differentiates from insureds that are going to be above that threshold.
Fantastic, thank you. And finally, Sam.
Very much in line with what Lauren and Rob described. In our interactions with our insurance clients and partners, that definition seems to be the standard, but constantly being reevaluated. So we're looking at roughly 250 million and below in revenue.
Okay, great. Thank you. Then we're going to move along with our agenda. Let's just jump into it. All right. Why don't we start off with just discussing the current state of the SME placements, just a really high level here. Rob, maybe you can kind of kick us off here, with your broader perspective, being a broker of kind of the broad array of offerings out there today, and kind of how the landscape looks from a SME placement perspective.
Yeah. So I mean, we've got a couple milestones that are displayed on the screen right now, and I think those are pretty good snapshots, and obviously a lot has happened between 2000 and 2019. But what still remains true is, and I think we'd all agree on this, the SME segment, however you define it, is probably the least penetrated space in terms of the number of organizations purchasing cyber insurance. lot of reasons for that, but many of the reasons are a function of what we're showing here on the screen right now. You know, in the early days of the cyber insurance marketplace, you know, the process for procuring cyber insurance for SME organizations that didn't have that level of maturity was pretty complicated. We had extremely long application self-assessments, if you will, where you know, an owner-operator, CFO, they just simply didn't have the insight to provide answers to many of those questions. And the price points were just out of line with how they viewed their risk, right or wrong. That also was somewhat exacerbated by, you know, with losses not nearly being as frequent as they are today or as severe. You were seeing elements of cyber coverage that may have been included on other lines of business within the insurance marketplace, whether that be on a package policy for a small business or any other sort of financial lines product. But as the market has continued to develop, you know, you on the insurer side and others in the marketplace have you know, developed a greater level of confidence, understanding of what underwriting factors are going to determine the probability or severity of a risk. You know, we've adapted. You've seen as losses have become greater, there's been pullback on the offering of sublimits and endorsements on other lines of business. So in some ways, small and middle market businesses, if they view that they have a risk in the world of cyber, their hand has been forced to start thinking about buying standalone cyber insurance. And we've made that process easier for them with the greater insight that we all have, to the point where there's less friction in the underwriting process, and those price points have come down probably lower than where they should be if we were all being honest with ourselves. But they've come to a point where we've hit that inflection point where it aligns with how small and middle market businesses view their level of risk, right or wrong. So as it stands right now in 2020, it's a very robust and competitive marketplace for SMEs. You've got MGAs, you've got direct writers, you've got insurers, traditional insurers who've developed streamlined ways to distribute their products to small and middle market businesses, and that really has created a competitive environment where, in many ways, small and middle market businesses are getting the same insurance coverage that a larger enterprise might, but they're getting it easier. There's less underwriting, and that price point is extremely competitive.
Thank you. Lauren, do you want to follow on to that?
Sure. Yeah, I would absolutely agree with many of the comments that Rob has just made. We're definitely seeing, you know, an uptick in new buyers. Definitely buyers wanting higher limits than we've seen in the past, as well as a lot of buyers are contractually obligated by third-party vendor relationships that they have in place, which is definitely further exacerbating the need for buying cyber coverage. I would also agree, just in terms of pricing, that prices have come down quite a bit, and I think they are being tested in the marketplace right now, just given all the latest ransomware losses that we've started to see and ransomware claims that have been picking up. And so I think that there will be somewhat of an adjustment in terms of pricing as we go forward. But definitely, to Rob's point, many of the new MGA entrants in this space, alongside of the technology approach that companies are utilizing in order to more efficiently write risk, have allowed us to have a very streamlined approach in terms of being able to offer coverage to a customer in very low period amount of time. So yeah, it will be interesting to see how this shapes out, but I definitely think that we'll start seeing changes in the pricing environment before the end of the year.
Great. Thank you, Lauren. And Sam, as you give us kind of your perspective of the current state, can you add a little bit around the submission requirements as well, and kind of what you're seeing in terms of being able data collection as well and assessments on these risks today?
Of course. It's really an interesting and somewhat unprecedented time, I think, in the SME and cyber insurance space in general. There's a number of macroeconomic market trends that were mentioned, such as the rise of digitization, where sensitive data that used to be stored in hard flat files is now being converted digitally and stored on the internet. We're also seeing, for the last 10 plus years, a big market shift to cloud computing, where more and more companies are now reliant on their third parties or supply chain business partners for core functions, really in order to function and operate. Those market trends and others have caused a massive shift that we're seeing today in a landscape where more now than ever, small, medium businesses are going and applying for cyber insurance. So we see this as a broad and relatively untapped market. The other big driver for SMEs is applying for insurance and looking for cyber policies is small businesses are forming partnerships and services with large enterprise companies. And large enterprise companies are mandating as part of their due diligence that the small companies must have some sort of cyber liability coverage. So in the submission process, we're seeing a couple of metrics that are critically important. One is time to quote. The time it takes to produce a policy, one that we feel confident and accurate, that we can stand behind, is very important, because the small, medium business is just, in some ways, trying to sign a policy as part of a larger initiative to get a deal done and generate revenue. So we're looking for kind of clever ways to compress the submission cycle and temper the amount of data that's required in order to produce fair and accurate policy in a shorter period of time. And we have a number of insurers that we're seeing becoming more reliant on cyber risk data to help act almost like an ingredient to inform how we price the risk. The other very important point which was mentioned was clarity in the data and inputs that's used to compute a policy. You know, a good analogy is if my car insurance goes up this year, I'm going to ask why. And my broker might tell me, well, we now look at the color of the car, and you have a red car, and red cars get more tickets, so your policy is going up because the color of the car is this new data input. Having clarity around those data inputs, especially around cyber, and explaining those to the SMEs is becoming incredibly important and meaningful, especially because the cyber risk landscape continues to change. With the COVID pandemic earlier this year, we saw a shift from a larger focus on infrastructure security to now a greater focus on signals related to endpoint security and working from home. So that's at a high level what we're seeing taking place today in a space versus even 2 or 3 years back.
Great, thanks. So, Sam, just to follow on that is, what are, I guess, when you look at assessing the SME and you're balancing the user experience, right, and how much data do you really need to effectively assess these folks, right? Is it possible to ask those, 2, 3 questions and, have a good, grasp on the exposure that the carrier is taking on?
Yeah, it's a great question. Assessing SMEs is historically been a challenge in the cyber rating space because of the size of the footprint. A large enterprise company has millions of IP addresses, devices all around the world. It's fairly easy to find signals of intelligence that inform the level of risk. But for a small, medium business that maybe has one storefront or just a website, it's really important and this is something that we focus and invest a lot of energy into, is to look for not all the signals, but looking for the right signals. We look for signals, security risk signals that are meaningful and that are applicable to both large businesses as well as small businesses. We found in our analysis both of the signals that we collect as well as analysis of hundreds and hundreds of different questionnaires and frameworks, regulatory frameworks, application security questionnaires that have been submitted to insurance companies. We've analyzed all of these frameworks, and what we found in speaking with cyber risk and insurance experts is there is actually a short list of questions that allude to a large surface area of risk in an organization. So we believe that the combination of sending a shorter list of questions, not a 500-question questionnaire, but maybe a 15 or 20-question questionnaire, and augmenting that with the real-time data and analysis and signals that are being collected on that company, good signals and bad signals of risk, can provide a very rich and holistic 360-degree view of the cybersecurity posture of an SMB.
Excellent, thank you, Sam. Lauren, can you add your perspective on, again, balancing that user experience with asking, the appropriate questions through your assessment from the carrier perspective?
Yeah, so I can talk a little bit about our product and our experience with regards to this. So right now we are asking 6 underwriting questions, and that's enabling us to be able to take an outside-in look on the risk. So very similar to what Sam has been discussing. We have many different data and analytics partnerships. SecurityScorecard is one of them. But we, today, the 6 questions are name, address, website, industry, employee count, and revenue size. And so based on this information, we're able to leverage our partnerships in the data and analytics cybersecurity space and come up with a risk score on the client. And then that risk score is linked ultimately to our pricing model. So it takes a customer on average about 2 minutes to get a quote. But one of the really important parts of our underwriting process and in the last year is that we've been building partnerships that are not only helping us on the distribution side, but also helping us get what we consider an inside-out look on the risk to complement that outside-in. And so there are many different companies, whether they're managed software security providers or even the big technology providers or companies like Microsoft that have a lot of data available of how their clients interact with their services. For example, Microsoft has something called Microsoft SecureScore, and they look at how companies have set up multi-factor authentication or how often their clients are backing up to the cloud. That type of information can become incredibly valuable to us from an underwriting and risk assessment standpoint. So there's definitely an emergence of partnerships that are happening, not just with companies like SecurityScorecard, but also with companies that are providing cybersecurity services or even collecting this different types of data and interaction points with their customers that really give us a much more holistic view of how we can assess and price the risk.
Fantastic. So, Rob, at what point, through the sales process, when you have a client that's, an SME client interested in purchasing a cyber policy, at what point is it just too much or too intrusive? They feel that they get, they don't want to, complete all the work, or, at what question number, right? If they're at, 12, 13, what's the breaking point where, it's too many questions and they just, you kind of lose the buyer? Is there kind of a breaking point there, or threshold?
Yeah, I mean, I think that's the million-dollar question. I mean, just before I get into that direct question, I would just add, too, that it's not just the application process that can cause some friction, similar to what everyone else was just speaking to. in terms of the insight that we can get from data and analytics, I think there is a lot of education that needs to be happening in the SME space to understand the need for cyber insurance and exactly what it does for an organization when they have an incident. So there's some buyers that can be lost in that process, and something that I think we as an industry need to do a better job of. But to your direct question, it really is a delicate balance. I mean, I think obviously the penetration rates in the SME space have gone up materially in the last 3 to 5 years as we've simplified the process for insureds by using these analytic solutions. And the concern obviously is with losses, with ransomware being more severe. If we make the process more complicated again, do we lose buyers? And I think the reality is we probably will. I mentioned this earlier, but I'll just say it again real quick. In the SME space in particular, we as brokers are primarily dealing with a CFO, a CEO, or maybe a general counsel. Most of these organizations do not have a CISO or a CTO. In fact, most of them don't even have IT in-house. They're relying on managed service providers in the cloud. So if you ask them questions that are very technical in nature, there's other vendors that they have to rely upon to answer those questions, and how valuable is that data for you, the insurers, if you have less insight into the accuracy of it. And there's just a lack of understanding from the decision makers at the SME company in terms of what this even means. So I think we've hit that sweet spot, and hopefully we as an industry are able to maintain that.
Okay. I'm hearing, right, we still have challenges in this space, and how to best overcome them, right? It sounds like, key challenges I'm hearing here are, right, the education of the SMEs, potentially distribution, obviously, sustainability of pricing, right? When you couple that with, how prolific, ransomware is growing, as, Lauren had mentioned earlier in our discussion. So, how best to tackle these, whether it be through distribution, education. Let's talk a little bit about that aspect of kind of overcoming the challenges today, and how to just enhance it. Right? It's whether it's through leveraging and enabling technology, partnerships. Right, Lauren kind of touched on that as well. The partnerships there. So let's start to talk a little bit about kind of how things are going to evolve and move forward in the SME space. Sam, do you want to talk a little bit more about kind of the technology, and you touched on this earlier, how things are evolving, but kind of the direction and how things accelerate today, whether it be with partnering with traditional carriers or MGAs. How do you see things kind of moving along and overcoming those challenges?
Sure, it's a great question. From the perspective of the insurance companies, reinsurers, brokers that we work with, we're seeing a macro trend in the space where insurance companies are continuing to shift their strategy from being only a payer of insurance claims to being a full life cycle partner of the insured and of the customer. And being a full life cycle partner means that we're there for our insureds and we're with them along every step of their journey. One important piece of that strategy that we're seeing taking place today is the insurance companies are feeling it more and more necessary and prudent to be making these connections and partnerships with cybersecurity technology solutions that they can then go provide for free or at a low cost to their insureds. And this is an incredibly important part of a strategy, because the goal here is we want to empower the insureds with technology-driven solutions that help them stay secure and stay cyber resilient. And if you think about an SMB, who has, let's say, 250 million or below, or maybe even lower in certain geographic areas, versus an enterprise that's doing 2 billion and above, they're going to have clearly a different operational expenses, budget, and strategy around cybersecurity. A lot of SMBs we talk to, even SMEs, don't necessarily have a dedicated security resource, a dedicated headcount, a chief security officer, or a robust cybersecurity strategy. They're really focused primarily on generating revenue for their business. And oftentimes, while cyber is on their mind and it's a concern from a business operations perspective, it can be deferred as an afterthought. Specifically, what we've seen with a number of partners to SecurityScorecard is we see the insurance companies leveraging Scorecard as a value add and a differentiator to the insureds. And once an applicant is bound and becomes an insured, brokers are distributing access to SecurityScorecard directly to the insured. It not only gives them the tools at their fingertips and helps augment their security program, but it allows the broker and the insured to now be speaking the same language because they have some of the same core essential data in front of them that's used to feed the policy. So almost like a safe driver discount, a number of brokers are saying, hey, if you maintain an A rating, a healthy cybersecurity score, you're subject to all of these additional safe driver discounts that we can provide. I would say further, the insured is leveraging the technology in a way that's easy for them. They need technology that's not going to be super sophisticated or super complex. They just need to know that they have a safety harness there in case something bad happens. They have the information at their fingertips, whether it's Scorecard or breach response. Like they have the essence of a playbook that they can execute on. Ultimately, this leads to a lower number of claims being made because the SME is now empowered to be more proactive versus reactive.
Great, Dan. Lauren, did you have anything to add, obviously on the partnership piece? Again, it would be great to hear a little bit more of how you're leveraging that on the technology side as well.
Great. I think we absolutely agree with Sam's point that, that really insurers are becoming more full cycle partnerships, and it's not just about paying claims at a time of a loss, but really being able to offer better services and advice upfront to the customers in order to prevent claims from happening. Today, with our product, we are offering our customer a health check that they receive. First, they receive a cybersecurity score during their quoting process, and then upon binding, they receive a full health check. One thing that's really important to us is that we've wanted to be able to really interact with our customers, so being able to provide them tangible advice in order to improve their cybersecurity risk posture throughout the policy term. And the hope is that we're taking those interaction points with how the customer is not only interacting with us, but interacting with services that we're putting forward, and actually having that link to our pricing model. So we are really trying to incentivize better risk behavior on behalf of our customers through the price of the policy. And so I think that we're seeing definitely a trend in the market with some of the digital MGAs that have come into place that are trying to do something incredibly similar in terms of creating more of dynamic pricing and using real-time data to price adequately. So I think this is a interesting time, and there's so many different cybersecurity services companies, and so it's very interesting to think about which ones you can add to your ecosystem that can help better benefit your customers, and then ultimately help the insurers as well.
Excellent. All right, this
Drew,
takes us. Yeah.
Go ahead. I was just going to add one quick thing there too. I mean that payer to partnership dynamic change is a great point, and one we absolutely have seen over the last few years and think is tremendously important as well. But I would just add, it's not about providing services to help policyholders become a better risk. I think in the SME segment in particular, clients are almost buying a cyber insurance policy as much for the access to the vendors that we can bring to bear to investigate and respond to an incident as they are for the financial risk transfer. But you know, we've seen time and time again that there are a lot of SME organizations that have been thoughtful enough to buy cyber insurance, but weren't necessarily educated enough on the process for accessing the policy and those vendors when they do have an incident, and an incident which could have been a minor issue that wouldn't have been particularly expensive for the insurers and the policyholder to deal with collectively becomes far more severe than it needed to be. So I think a lot of the greater focus that we need to place on the education side is also, hey, great, you've made the great decision to buy this policy, you've got access to all these risk management services, but a constant reminder as to here's how we can help you when you do have an incident, and this is what that process looks like is critically important.
Great. I like that, Rob. I like where this is going. Let's continue that in a moment, but let's take a brief pause for our next polling question. And this polling question is a true or false. 99% of the U.S. economy is made up of small businesses. True or false? All right. So, 99% of the U.S. businesses are small, right? And that just shows you the breadth of, you know, how large of an opportunity, and right, the penetration rate is so minimal today. There's a tremendous opportunity here across the market. So let's get back to prior to the last polling question. We were kind of getting, Rob started going down the path of continuing the discussion around payer to partnership, right? Vendors, the response piece. Let's just talk a little bit about how, what's working, Rob, right? What do you see, the feedback from your insureds? What do they really take to? Is it, knowing that there's that helping hand there when things, go bad for them, or do they like the pre-breach, aspect as well? Can you talk a little bit more about kind of the preparedness as well that might be available that you've seen out in the market?
Yeah, I think it's both. I think, the adoption rates on some of the risk management services that insurers offer, the uptake hasn't been as great as any of us would like, but I think with some of the increased insight that insurers also derive from the application process with the use of analytics and these external assessments, that's more effective in driving uptake because they actually have a roadmap to where they have some vulnerabilities where they can focus those services and the investment. I think in terms of the response side and access to vendors, some of it, Lauren brought up the contractual reason to buy cyber insurance in the SME space. So unfortunately for some clients, they're buying it because they've been told they have to, but not because they think they need it, nor do they understand what it does. So some of that is on us, the insurance community and the brokerage community in particular, to educate the clients on that. But I do think there is this perception that cyber insurance is like auto insurance, and if they report a claim, that their premium is automatically going to go up and they're going to get dinged. So the constant reminder to our clients that you as insurers actually want to hear from their clients so that you can help them is really important and something that we focus on, so that they have those initial calls with breach coaches and forensics vendors and really understand whether something might be a bigger issue. and avoid it becoming far more expensive than it needs to be.
Great. Hey, Lauren, anything to add to Rob's comments?
Yeah, absolutely. I think, you know, the pre-breach is incredibly important and somewhat underutilized, you know, component, and that's something that we're definitely seeing in the small business space. I also think on the claims side that, you know, insurers have to do a better job at being able to triage claims when they come in. So I think a lot of times with these small business customers, you know, they think that there may be a cyber attack that occurred, but it wasn't actually a cyber attack. It's sometimes what we consider more of a geek squad issue. So how can we better help customers, you know, get the right type of help that they need in a very efficient way? And so, you know, being able to manage small business claims at scale is definitely, you know, somewhat of an art and science, and definitely we need to be able to utilize better technology in terms of AI for claims triage and just learning, you know, from the experience that we have as just to getting the right help for the customer when they need it and at the time that they need it.
Great. So it's really investing in those partnerships, right? Technology, like we you know, that's been the common theme. You know, whether it be through the user experience or the assessment piece, you know, it totally makes 100% sense. Yeah, let's talk about, you know, continuing kind of that InsurTech discussion. Sam, you want to talk a little bit more about kind of what you view the role of the technology, you know, aspect, you know, a little further in the value chain here?
Sure. You know, I very much view, well, look, the purpose of the technology is really to help provide value to the customer. Like that ultimately is the objective and the mission. For us, it could be our customer, which would be an insurance company or broker, but also our customer's customer, which would be the insured. And we very much see technology being leveraged in a number of ways. When we talk specifically about cybersecurity, it's really twofold. Number one is cybersecurity solutions are being leveraged almost like ingredients, inputs that go into the computation of risk, that go into the risk models, that go into the actuarial tables. I don't think that there's a silver bullet technology solution today where we can point to this one metric or one data source and say, you know, if I pull the data from here, it tells me everything I need to know, including SecurityScorecard, by the way. And I say it humbly, we're one input and a set of analytics that gets converged and kind of mixed with these other data points and ingredients to help refine the conclusion that we're trying to draw. The other set of analytics, which I think folks talked about quite a bit, is technology that folks talked about quite a bit, are the technology solutions that help power the partner, power the customer, and power the insured. So these are the, as we were talking about before, the treasure chest of solutions that we want to provide directly to the insured, to give them the tools, the insights. But I think by and large, it's really about giving them the confidence to know that we're there for them, and they have they can kind of forecast solutions to and anticipate problems that could arise over time.
Fantastic, thank you. And then just you know, quickly, you know, as you know, and this could straddle right InsurTech, you know, distribution partners, really quick. Anything to add on the distribution front or InsurTech as well, Rob, for you know, kind of from the brokerage perspective?
Yeah, I mean, I think we really do embrace the need for InsurTech. Obviously, insurance as an industry has not been the most forward-thinking and adopter of technology historically. I think the days of the process looking like client fills out an application, they wait 2 weeks to hear from their broker, and then come back with a quote that they understand increasingly doesn't work too well in a world where everything is been Amazonified, and they can get services and products at the snap of a finger. So I think to the point I've hit on a couple times earlier with the need for education, I think one of the greatest challenges that drives the lack of penetration in the SME space is there's not enough talent in the brokerage community that can explain these issues to SME buyers and get them to the table to buy the right insurance. So anything that we can do from a distribution standpoint to automate that and provide that insight and value to our customers and prospective customers is going to be a needed investment for the industry, and one we certainly embrace.
Fantastic. Lauren, anything to add?
Yeah, I would agree with Rob's point. I think for us, we're definitely seeing that the agent and brokers still have a large, part to play in serving the SMB customer. Many times these customers are not just buying a cyber coverage, but are buying their BOP policy, their GL, and they have a trusted relationship with the broker. But to Rob's point, we have to do a better job with being able to educate that customer and help the broker educate their customer. And so to that regard, we're seeing other companies like these managed software security providers that are already invested with these small businesses and being able to offer their cybersecurity services. So I think we will see in the future some really interesting partnerships come to the table between brokers and between MSSPs and the insurers, and I think it will be very powerful if we can bring those partnerships or get those partnerships in play in a digital way.
Okay, before we move into our final polling question, and I know we're running short on time here, let's, panelists, if you could just give us a 30-second, very high-level overview of kind of what you see, for the future of the SME cyber space, purchasing or the threatscape, or what it be, kind of the future here. So let's go to Lauren first.
Great, thanks. I think the future is bright for SMEs. I think we will see these SMEs continuing to buy cyber insurance and be able to do so in a digital manner. I think we will see better partnerships form on the distribution side that will enable better education to happen to the customers. And then on the claim side, I think we will see also better partnerships taking place that will allow us to ultimately triage claims more efficiently and get customers the services they need in the best way possible.
All right, Sam?
Sure. My 30-second summary on trends is I think we're going to continue to see the serviceable market for SMB insurance grow worldwide with more and continued pressure from big companies on small companies to have cyber insurance. We're going to see better, more evolved cyber risk modeling analytics. We're going to see continued focus on cyber resilience with work from home, and we're going to see continued investment to help bridge the knowledge gap with better education on cyber resilience for underwriters, brokers, and insureds.
And Rob, finally.
I agree. We're going to see the cyber insurance market continue to grow, both because of increased awareness due to ransomware and greater reliance on technology due to current working from home scenarios, which look like they will continue for the foreseeable future. I do think price points will start to tick up a bit due to ransomware, and we probably will have some disruption in the marketplace with insurers pulling back due to the mounting losses from ransomware.
Thank you, and there you have it. Clearly tremendous opportunity in this space, growth, innovation. Really looking forward to seeing this space continue to evolve and grow, and really, thankful to be a part of it as well. So thank you, guys. Let's move on to our final polling question. And our final polling question: which of the following is a typical SME? Okay, and that brings us to the question session. So thank you very much to our panelists. So we're going to roll over to live Q&A now. It'll just be a moment. Thank you all. Okay, why don't we go to our first question from the audience. Let's see here. All right. So the question is, a $250 million company is a large company. The way you underwrite a $10 million company is different than a $250. The question is, a $250 company is large enough to have dedicated IT people, procedures in place without relying on the outside third parties to handle those functions for them. So the question is, do you underwrite a $10 million company the same way you underwrite a $250 million company? If so, can you elaborate on how you see these size of companies similarly? So absolutely. Just from my perspective here, before I turn it over, I'm going to have Lauren answer this one. But just from my perspective, right? I mean, when you look at the wide spectrum of the definition of SMEs, I think you do have a different approach, right? You're going to, as the complexity of an SME becomes a bit greater, I think there is a bit different of an analysis done by the underwriter. But Lauren, do you want to kind of elaborate on this one?
Yeah, great, thanks. So at AXA we differentiate our SME product by under 50 million in annual revenue, like we said earlier in the webinar. And for those companies, we're able to use data and analytics from technology providers to do an outside-in risk assessment on the risk. And so it's really a box underwriting approach that we're able to do versus accounts that are, over 50 million, and hit up to the 250 million space and higher. We really see the traditional approach of underwriting that's all done through submission form, multi-questions, and a lot of back and forth, I would say, between the broker and the actual client and the broker and the insurance company. So I think that for these SMEs, we're given the complexity or the non-complexity of their business, we're able to take a much more streamlined approach and really rely on that more outside in and even some inside out risk indicators that we're able to get through partnership.
Good. Thank you. Let's go to our next question. And this one is, as we see a reliance on outside assessments, how are the writers of SME cyber products assessing risk when offering broader coverage, right? So, example, social engineering coverage, system failure, contingent BI, et cetera. Sam, let's direct this one to you from the assessment angle.
Sure, I can get us kicked off. It's a great question. Social engineering tactics and things like media manipulation are quite effective and even more effective on a distracted and vulnerable workforce. And what this means is it means it's increasingly important to be using and leveraging predictive indicators of risk that look at the behaviors of an organization with a shifting climate, because security is not a static thing. The landscape is changing and the environment is changing literally on a minute-by-minute basis. And the big challenge is organizations overwhelmed with cyber risk need clarity on how to measure it, plus how to operate, making cyber resilience metrics more paramount. And that's where we see solutions like SecurityScorecard come in, because in this case, Scorecard is helping to shed light into the performance measurement component and is exposing risk data points across different categories. And those risk data points across the different categories, like website security or network security or social engineering, those can be used and are used today effectively at the discretion of the insurance co and at the discretion of the underwriter to help better assess and price the risk. So we see oftentimes, we're providing multiple different types of signals and input, and the companies we're partnering with are effectively mapping those to the areas of coverage where there's relevancy, and then using those to help expedite the time it takes to assess and price the policy. Or Lauren, anybody else have any additional thoughts from the insurance side?
Yeah,
Sure.
I mean, I think that, I'm sorry, go ahead.
No, I was going to go ahead, Lauren, take it.
Yeah, no, I mean, I think how you answered it is perfect. Yeah, there's no other comments there.
Yeah, no, it's just kind of from the underwriting perspective, again, just to add a little bit more to that, I think there are, right, technology and outside assessments is wonderful, right? It's not, helps give you a broader view as well and an overarching view. But I think, you still have to ask those pertinent questions at times for some of these exposures that these products are taking on. For example, social engineering, is there authentication that's taking place? Do you have that process in place? So there are sometimes you still do have to ask those questions to ensure kind of best practices are, yes, indeed, are in place. All right, thanks for that one. Let's go to our next question. And this one is, how often do SMEs understand ransom demand, reimbursement versus pay on behalf of? And do you see a liquidity challenges for SMEs to pay demands? Hey, Rob, I'm going to direct this one to you.
Thanks. Yeah, I think that's a really important consideration and probably not one that we discuss enough or get enough in the way of questions from clients and prospective clients. I think I made the point earlier in the presentation that, for SMEs, they're in many ways just as much buying a cyber insurance policy for access to the vendor relationships as they are for financial risk transfer. So I think the point in the question is well taken about the liquidity challenge and putting up that much cash quickly to pay a six-figure or higher ransom demand, but also to the point, most organizations, small or large, are not going to be able to acquire that much Bitcoin or other digital currency that quickly, right? So I think for SMEs, the pay on behalf of is important, and certainly they are tremendously reliant on the forensics vendors that can actually acquire the Bitcoin and facilitate those payments as needed.
Good, thank you. All right, let's move along. We have time for another one. All right, our next question is really more around claims. What is the most efficient claims model for SME claims handling post-breach, and how are large carriers adapting their current claims model for SME space? This could be, is this really a one-size-fits-all for all carriers? But I'm gonna, let's kick it off with Lauren, responding to this.
Great. Yeah, thanks. So I can talk a little bit about what AXXL is doing right now for our SME program. So we've tried to create it as efficient as possible for a small business to get a claim to us, so that there's incentives to be able to report the claim very quickly. So today we have a digital FNOL process. So the customer comes in and they're able to use chatbot technology for the intake of the FNOL. And we're able to do everything from uploading pictures to videos to asking those first notice of loss questions. That is immediately linked to what we consider our claims triage process. And so depending on the questions that are asked, we have a 24/7 hotline that then receives those questions and can reach out to the customer, or the customer can reach out to them if necessary. And then we work through our breach counsel, and then as well as working through with our claims adjuster as to what forensics firms or any other types of firms that we need to bring into the process. So I think that, we are beginning to kind of use technology and chatbot and AI to build a better claims triage, but I think this is something that as a carrier we need to get much better at. And hopefully over time, as we have more claims and we're able to handle more claims, we'll be able to build out a more robust system. And I think the reason why this is so important is that a lot of these SMEs, they don't have their own in-house CISO. And so we see with these claims that a lot of times they reach out and we consider it more of like a Geek Squad issue than actually triggering coverage to the policy. So we need to be able to better get them the help that they need as quickly as possible, and make sure that we're providing answers back to them quickly.
Great. We've gone over time. Just really quick, just to add to that real quickly is, clearly, right, none of these SMEs are bulletproof from, especially ransomware, right, at the end of the day. So I think it is key of building the carriers, claims department to foster, relationships with outside, whether it be outside response vendors, and just building a very robust response offering. And, at the end of the day, it's all about, the communication as well between, all the parties involved as well. So just that's what I want to add there. But we've gone over our time here today. Again, I want to thank all of the panelists. Great job. Thanks so much. And thank you to the audience for your time today. And I hope everyone has a great rest of the day. Be well. Bye.